What's up, traders? So today I'm going to show you exactly how I took my account from $10,000 to multiple six figures in a very quick span of time. Now, if you're new to the channel, my name is Rashad, and there was a time where I couldn't afford to take a day off, but now the stock market pays me to stay at home because I trade options full time and I've been blessed to make multiple six figures per year doing so. And today I'm going to show you exactly how I got here. Now, of course, first things first, I need you to go ahead and smash the like button. That just simply helps push this video out to more people and get my message to as many people as possible. And do remember that I am not a financial advisor and this is not financial advice. All trading comes with risk. I'm just showing you how I built wealth over time. Now, before we even begin, I have to give a huge shout out to some of the members of the Trader Freedom community. We just ended the month of June, so a lot of people are posting their results for the month of June and just giving general updates. And so we can see that Lee Joe says, June has been my best month yet in selling puts and calls. Thank you, Rashad. Combination of your awesome alerts and some of my own. TQQQ, BITX, UPRO, Tesla, Amazon, NVDL, MSTX, Hood, and HIMS. And he made $16,822 during the month of June. That number is crazy because I know Lee Joe, we've had personal conversations and I know that he works a full-time job. And he has a good career, but now he's making this type of money on top of whatever his salary is. Like, it's just amazing. And I shared in a previous video that I am actually very happy that I didn't discover trading options until after I was done working a full-time job. See, I stopped working a full-time job in 2017 because I kept opening up more and more businesses. But unfortunately, I didn't get started options trading until 2020. And so I never got to experience working a full-time job while also doing options trading. And like I said before, God's timing is perfect because had I been making this type of money while I was working a 9 to 5, that probably would not have been the best of ideas. All right, but God's timing is always perfect. And then we have Cody here. He posted his results for June, and we can see that he made $1,035 just yesterday. That was just yesterday's total. But it looks like during the month of June, he only had one day that was red. And so that's great to see. Cody has been trading with me for quite some time now, so he knows my program and my strategies down pat. Then we have Terrence here. He said he closed on $336 in trades just today. So shout out to you, Terrence. That's an amazing way to end the month of June. So good for you. And then we have Daniel here. Now, I absolutely love when new traders see the power of using the stock market as your own personal money printer. And so Daniel here is very new to the community. And he says, you guys are awesome. I can only be inspired to see all these green days and exceptional returns. 4th week for me, and I'm improving. Still taking super baby steps and learning every day. Trying to get used to Thinkorswim, which caused some issues with not closing trades properly. Learned that broker fees add up on low paying options, LOL. However, I'm happy with the overall results. As a newbie, I can't complain. How to grow it little by little, I feel I am on the right track. Thanks everyone. All right, and you can see down here with this picture that he shared that he is making progress every single week. So his first week, he lost $7.90. Week 2 made $128. Week 3 made $194. Then week 4 made $476. And I believe as he's getting the hang of things, he's doing more and more contracts and taking it to the next level. But shout out to you, Daniel. I cannot wait to see what you do for the month of July. Now, you know, when I think back to my own personal options trading journey, it's funny because I remember when I first started learning back in 2020, and I told one of my best friends that if I could just make $200 per week, which would have been $800 per month, that would have been life-changing for me. All right, and I had absolutely no idea what God had in store for me with options trading, but I just started thinking about my bills in my head. And I'm like, well, if I make $800 more from the stock market, that would pay for my car. At that time, I had a 2011 Dodge Charger. I think the payments were like $350 a month. So I'm like, hey, it could pay for my Dodge Charger, it could pay for my insurance, and it could pay for my phone bill. And then I'll probably have a little bit left over that maybe I could treat myself to a nice activity. And I knew that if I could just make that amount, that it would mean the world to me, especially as I have a wife and 6 kids that I'm taking care of. And so although my successes in the market are to another extreme at this point, I always like to humble myself and think back to where it was that I started from and where he brought me from and where I am at now. And if you're just now starting your options trading journey, then just know that I am super happy for you and you have a whole lot more in store coming soon. But that's enough of my spiel. Let's get down to business. Now, the first thing I'm going to do is show you which option strategy I use in order to grow my account quickly. And secondly, I'll show you the best stocks in order to do this strategy on. And thirdly, I'll show you how to actually place the trade. All right. And the option strategy that I use in order to grow my account from 10K to multiple 6 figures are credit spreads and iron condors. And so we'll briefly go over how credit spreads work. So if you're new to options, just stay tuned. However, if you are already experienced with credit spreads and iron condors, make sure you stay till the end of the video because I'm going to show you a better way to go about it. But real quick, some of you have been asking if there was an easy to use investment app with some good perks for new users. So I figured I would share Moomoo with you, which I've also been using myself. Now, I honestly think that Moomoo is super beginner friendly. It's easy to get started. And even if you're new, the platform gives you access to great tools and research all combined into one single app. Now, I know that some of you are just now getting started in the market and you may not have a big budget. And that's why I really like the fractional shares that you can use within Moomoo. You can essentially start with $5, build up a small watch list, and ease into investing with zero pressure. And right now, the new user rewards are actually kind of crazy. If you deposit $100, then you will get 5 free stocks. And you can see here, you can get up to a maximum of 60 free stocks. And even if you're not actively buying stocks, you can still earn up to an 8.1% APY on your idle funds. So the money that you just have sitting there in the account doing absolutely nothing will still get you a return on your investment, which is much more than we could say for most bank accounts. And to me personally, getting the 60 free stocks, to me, is worth opening up an account just to get that alone. But then when you factor in all of Moomoo's extra features, it's definitely a winner in my book. And by far, one of my favorite features is that Moomoo has $0 in fees for most stocks. And when you compare that to their competition, clearly Moomoo charges a lot less than they do. And as an option seller, this helps me save a lot of money when it comes to contract fees. And I absolutely love the markets tab within the Moomoo app. Because if I'm looking to buy or trade a stock within a specific sector or category, I can just come over to this investment themes tab here and select the category that I'm looking for. So let's say I want to trade a stock that deals with sports. I can just come down here to sports and you can see a list of stocks that already fit that criteria. Or let's assume that you like ETFs better. So we could just come up here to the ETF tab, and let's assume that you're interested in companies that pay a monthly dividend. We could just come down here to the monthly dividend ETFs, and it will give you a full list of stocks that fit that criteria. And this just makes finding stocks to trade or buy that much easier. But I have a link to this offer below in the description. It's worth taking a shot if you're ready to take that first step into investing or trading. But just a heads up, you can only get the 60 free stocks by clicking on the link below in the description. So go ahead and click it and open up an account, and you can thank me later. But let's get back to business. Now, with credit spreads, the objective is to generate income from a stock price staying above or below your strike price. Okay, and this is also known as a vertical spread. You'll probably see it within your brokerage account labeled as a vertical spread. And essentially, there are two different types of credit spreads. You have a bull put spread and a bear call spread. Now, with a bull put spread, you are just hoping that the stock price stays above a certain point. And then with a bear call spread, you are just hoping that a stock price stays below a certain point. All right, so if you are bullish on a stock, then you'll probably use a bull put spread. And if you're bearish on a stock, you would probably use a bear call spread. Now, with a bull put spread, what you would do is you would sell a put closer to the money and then buy a put further from the money. And so for an example here, let's say we have a stock that is currently at $80. What we could do if we wanted to do a bull put spread and we thought that it would stay above a certain point, well, we could sell a put at $75 and then buy a put at $70. And so we would receive money for that put that we sold, and then we would pay out money for the put that we bought, and we just get to keep the difference. And so we can see from this trade, we would have made $200, and then our max loss is always going to be the distance between our strikes. So in this case, that's $5 between $70 and $75 times 100. So that would now put us at $500, and then minus the premium that we received, which was $200. So 500 minus 200 will get us at a max loss of $300. All right, and so that is how a bull put spread would work. And so in this scenario, we are just hoping that the stock price, which is currently at $80, just stays above the $75 short strike that we set. And as long as it does, we just keep the money we were paid and we go about our day. But now let's look at a bear call spread. All right, so same thing here, it's just in reverse. We want the stock price to stay below a certain point. So here we have a stock price that is currently $65. And what we did here is we sold a call at 70, and then we bought a call at 75, which created our bear call spread. And then same thing here, we received $200 for doing so. And our max loss would be the distance between our strikes, which is $5, times 100, because every contract is worth 100 shares, and then minus the premium we received, which would get our max loss to be $300. Okay, and now as long as the stock price just stayed below the $70 mark that we set, and currently it's at 65, so as long as it stays below 70, then we just keep the money we received and we go about our day. Okay, and that is how credit spreads work. Now, when you combine them both together, you create what's called the iron condor. Now, here's an example of an iron condor. So like I said, it's just a bull put spread combined with a bear call spread. And so if we look here, we sold to open the $65 put and bought to open the $60 put. And then we sold to open the $75 call and we bought to open the $80 call. And as long as the stock price just stays right here within the range that we set, then we could just make our money and go about our day. And we can see in this example, we collected $300 with a max loss of $200. And that was the strategy that I used. However, this strategy works a lot better when you use it on specific stocks. So let's go take a look at some of the best stocks to use it on currently. Now, when I was using this strategy, I really focused on weekly income. All right, so in the Trader Freedom community, we have strategies all the way from day trading all the way up to monthly income for our people who are more busy. However, when I was aggressively growing my account, I focused on the weekly income trades. And I define a weekly income trade as anything between 1 to 10 days. All right, and when you're using strategies like this, typically you'll need to focus on stocks that have a good amount of volatility to them. Because the higher the volatility, the more premium will be paid for selling our credit spreads and iron condors. And so to find a good stock to use, I typically use barchart.com. They have some of the most advanced screeners in the market. And if you would like to try it out, I have a link in the description below. You can get the first 30 days for free if you use the link below in the description. But if I just come here, I have my own screener that I saved and you can just copy off of this. But I titled it High IV Stocks. But I look at stocks with implied volatility of greater than 50%. And then the last stock price, I want it to be anywhere between $10 to $500. And then as far as market cap, I typically focus on larger companies. So I put a minimum of $30 billion for their market cap, and then their IV percentile to be at least 20%. And so if we hit see results, we can see that there are currently 18 stocks that fit this criteria as of right now. And I have them sorted here by market cap. And so we can see we have Tesla, Palantir, ARM, GEV, AppLovin, Intel, Robinhood, Carvana, Roblox, and a few others down here. Now, to put it simply, there is a stock within this listing that was the only stock I traded for years, actually. Now, I would never tell anybody to do that. You should never put all your eggs in one basket. However, it worked out great for me and I made a ton of money. However, years later, as a wiser trader, I look back like, that probably wasn't the best thing to do. However, the stock that I am referring to is Tesla. Tesla was the only stock that I traded for several years. And so because of that, I have a pretty good understanding of how Tesla moves. And Tesla always has some pretty good premiums because it's pretty volatile, because we know Elon likes to talk and he could just put out a tweet or say something that gets the stock moving in one specific direction. All right, but if you're going to use a strategy, you want a stock that has a good amount of volatility to it. And so for this example, we will go ahead and use Tesla.
All right, so now we are in the Moomoo app and I have Tesla's options chain pulled up. Now, the first thing we need to do is select our expiration date. Now, like I said, for weekly income trades, I define that as anywhere between 1 to 10 days out. And so in this scenario, I would come out to this date that is 10 days out from now. And I'll go ahead and select that. And the next thing I want to do is look at the expected move. So we can see that the expected move for this expiration date is plus or minus $22.06. And the expected move is just the maximum move that the options market currently has priced in for this specific stock for this specific date. And so this is saying at the worst, Tesla stock would move down $22 or it will move up $22. And so what we want to do is when we are setting up our iron condor is we want to make sure that our strike prices are well outside of that $22 range. So if we take this $300 price and we subtract $22 from that, that will put us at a price point of $278. So on the put side, we want to be at a lower price than $278. Now, the next data point that I look at is the delta. So we can see the delta column here. And when I was doing this strategy specifically, I would aim anywhere between a delta of 0.05 to a delta of 0.10. Okay, so 0.05 on the conservative side and 0.10 on the more aggressive side. Now, this is specifically for this strategy alone. Now, if you're familiar with the channel, you know that I use different deltas for the wheel strategy. However, when trading a stock that I know my goal is not to purchase the shares, then I would use a much more conservative strike. And so let's say in this case, you want it to be a little bit more aggressive. Then what I would do is come to this strike of $260. We can see it's a delta of 0.09. And so we will sell to open that strike price. And now we need to select the strike that we want to buy to open. And when selecting how wide you want your spreads to be, it really just depends on your personal account size and your risk tolerance. Because the wider your spread, the more money you'll make. However, the more risk you're taking on. And also the more buying power that you will need in order to place that trade. But let's assume for this trade, we're going to do about $35 wide spreads. And so since our short strike is at $260, that would put our long strike at $225. And so I'll go ahead and select that. And so in this case, we are receiving about $154 for selling the $260 strike. And then we are paying about $48 for buying the $225 strike. And we can see down here that we will collect the difference of about $108 per contract. However, this is just the put side. So since we are doing an iron condor, we need to scroll down over here to the left and go ahead and place our call side. And so from here, we're pretty much going to follow the exact same steps. We'll come over here and place either the 0.08 or 0.09 deltas. And just to get a nice even number, we'll use this $350 strike at 0.08. So we will sell to open that strike. And then remember, we are doing $35 wide spreads. So that will put us at a long strike of $385. So let's go ahead and scroll down. All right. And now we will select to buy to open the $385 strike. And if we look down here, we fully have our iron condor set. And if we look at the premiums, we can see that we will be receiving $186 per contract for placing this trade. And our goal is, of course, for the stock price to stay in between our strike prices. So in this case, we will want the stock price to stay in between $260 to $350. And with the stock price currently being $300, the probability of that occurring is very high. And the reason why this strategy is so great for small accounts, because the width of your spread determines how much you need in your account in order to place this trade. And so since we did $35 wide spreads, you could technically put this trade on with just $3,500 in your account. Okay, and that is per contract. So if you have a slightly bigger account, then you can up the amount of contracts to fit your account size. But of course, it wouldn't be wise to bet your entire account all on one trade. So if you have a really, really small account, then you can just lessen the width of your spreads. Now, if the trade were to go against us, what I typically did back then is I would set a stop loss to about 3x or 4x the amount of premium received. All right, and so what that means is if the stock price were to go against us, what I would do is I would set a stop loss to 3 times the premium we received here. So in this case, we received $186 per contract. And so I would set my stop loss to 3 times that amount. In that way, if the trade went against me, my brokerage would just automatically close me out the trade, and that would prevent me from taking an even bigger loss. However, with this style of trading, like I said, I did it for several years straight, and I was profitable over 90% of the time.
But there you go, folks. That is how I grew my account from 10,000 to multiple 6 figures. I constantly did my weekly income trading strategy on Tesla, and it worked out amazing for me. But now we trade dozens of different stocks within the Trader Freedom community. And if you do know anybody who could use help generating income off the cash that they already have, then tell them about the Trader Freedom community. The link is below in the description. But not only will they get my exact trades as soon as I enter them, but they'll also get my entire options framework via the Trader Freedom course. They'll have access to ask me questions at any given time. And lastly, they'll be within a community of other traders who all have the exact same goal as them. So if you do know anybody, the link is below in the description. Come join us. We would love to have you. And make sure you like the video, and I will see you guys on the next one. Peace.